Euro dollar long-term forecast for the week of March 19th, fxempire.com. The euro dollar pair fell for most of the week but had a pretty strong session on Friday to eventually form a hammer for the week. The 130 level, as you can see, has held up as support, but the previous week was a shooting star, so this suggests to us that perhaps we are going to see consolidation going forward, a tightening of the range. The 132.50 level is the top of the hammer, and that area has served quite well as resistance on the daily chart. And of course, the bottom of this week's candle was the 130 level, and that, of course, has served as massive support going forward. Because of this, we think the levels are tightening, but if we do break the top of the shooting star from the previous week, we still see quite a bit of resistance at the 135 level. So, going forward, we're actually looking for signs of weakness as the trend is most decidedly down, and we have other countries in Europe to worry about. Portuguese bonds are spiking, and for that matter, the Greek bonds are starting to rise in yield as well. 130 is obviously a major spot on this chart, and we need to uh, perhaps rise a little bit, pick up a little bit of momentum before we go slamming back down into it. The 130 level will be difficult to break, and as such, we want to give our trade a little bit of room to be in profit before we try to break down through there. This bounce that looks like it's going to happen either to 132.50 or 135 should offer the perfect opportunities. Again, if we close on the weekly above 135, then it means something's been miscalculated, and we simply have to reevaluate the entire situation.